Hey guys, I hope you're having a great weekend. I know it's been a while since we dropped our weekly analysis. I've been away for some certain reasons I can discuss in this video right now. But we're back and I think we're going to be sharing lots of charts moving forward. So this week we'll be taking a look at a few chart analyses to get you prepared for the week ahead. So I'll be starting with gold, Nasdaq, crude oil, GBP-USD and EUR-USD. I think these are just enough to get you started with this week, right? You don't really need to trade much to make profit. So if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. And if you're not subscribed to our YouTube channel, please subscribe and follow us on Discord so you get to engage with lots of community members that are willing to share their trade ideas within the week. So as you can see on my screen here, this is a gold chart on the daily time frame. Remember, I trade simple price action, so there's no need to complicate things. So there's no need to expect so many grammars from this video, right? It's all going to be based on what you already know and how to, understand market dynamics and how price moves, right? So this is the daily chart, as I said earlier, on a gold. And what you can see is gold has been on a bullish trend since 2017, right? All the way down. From these price levels, you can see the gradual grind to the upside, creating higher highs and higher lows. And over here, within the last 4 years, I think we had a huge consolidation where we failed to take out the all-time highs. You can see 1, 2, 3, 4. So finally, this year, early this year, we had a bullish breakout from this resistance level, which sent the price of gold to an all-time high. So we're currently trading at an all-time high. Currently experiencing another bit of a consolidation, just like we had over here. But I think this is going to be short-lived before we see another, bullish move to the upside. So I'm going to go down to the lower time frame to see how we can spot out great trade opportunities for the week ahead, which is, to be precise, the reason why we're here, right? So going down to the lower time frame, I'm going to start from the 4 hours time frame to get a clearer picture of what's happening down here. So this is how you do price action. Move from the higher time frames and you go down to the lower time frames, because for most traders we are going to be executing our trades on the lower time frame. So the higher time frames just give us a brief overview of what we're looking at for, right? So now you know we're in a macro bullish trend on gold. So what do you expect from a macro bullish trend? You expect to look for opportunities to go long, right? I'm not saying it's wrong to take a sell trade. Let's say, for example, if you had maybe drew a trend line here, for example, and you were going to take a bearish breakout, this would have been a decent sell trade, right? But my point is, leaning towards the direction of the market would give you more advantage over, trading the opposite direction of the market. So the market is bullish, so you want to be taking buy trades, right? Though it's okay to take sell trades, but they are much more risky or riskier than taking buy trades in a bullish trend. So right now, looking at this 4 hours time frame, you can see a clear support level where we had multiple price bounces, right? Then we had price moving to the upside, which happened over the last 2 weeks, I think. So I'm going to draw a few lines. So I'm going to take these highs, for example. So you can see there's a clear trend line, and if you take a broader look, you see this looks like a descending triangle, right? Support level, lower highs, with a solid breakout now from its trend line, right? And this movement is attributed to what happened on Friday, which was our NFP. The dollar went bearish, so I think that's what translated to the bullish move we had on gold. So moving on, here's what I'll be watching out for to get into a gold trade next week. I know I made a few pips on this, I think 400 pips or so, because I entered a bit early, right? But right now, I already exited this trade, but to go back in, I'm going to wait for a pullback. So price coming to this area of value, consolidating a little, and then moving to the upside. This is the only reason or the only price case scenario right now that would warrant me going long. So we get a pullback, kind of like a retest into this area of value, and then wait for a good opportunity to go long. That's the only way I will be buying gold right now. So I won't just be jumping into a buy trade, because if you jump into a buy trade at this current price, the logical price levels to set your stop loss would be around these lows, right? If you want to go and trade, a little bit risk free. But the problem with this is that your stop loss will have to be super wide, and the markets can be unpredictable sometimes. you could also get price going into your stop loss, which would be a huge loss for you. So if we wait for a pullback into this area of value, so the reason why this is an area of value is because this is one of the points we had our trend line crossing over, right? So we had a good reversal at this price level 1, and then we had a consolidation after the breakout from this trend line. So it's logical to expect some price action at this price level, so just in case we get a reversal. So if we get a reversal and a pullback, then our entry is going to be above the bounce off of the area of value, and stop loss could easily be placed around the lows of that retest. So this will give you a tighter stop loss and a potential safe trade. So even if it goes to your stop loss, then you have a tighter stop loss as compared to setting your stop loss over here and getting your entry here. Some traders will also do this, put their entry here and then put their stop loss underneath this price level. This is also a good move, but why jump or rush into a trade where you could easily get an opportunity for a retest? And yes, I understand that a retest might not necessarily occur, okay, but I believe it's better to miss a trade and get a better opportunity that you are sure of than jump into a trade because you are scared of missing a trade. Any trade you go into based on FOMO is most likely going to end in tears, right? That's what I believe. So it's best to be patient, wait for the best trade opportunities, and hit the market hard when you get them. So this is what I'll be watching out for on Go. So speaking about price targets, my first take profit target is going to be around these price levels, which will be at my TP1. I'm going to scale up my position around these price levels, and as we move higher, I'm going to take profit as we go higher. That's if we need to go higher. And there's also a good and a decent chance that we hit this price level and then reverse back into this price level, consolidate before we move, go higher, right? That's why when you get an opportunity to get into a trade, you take profit as you go higher or as you hit your immediate take profit target. So that's it briefly for gold. I believe this is clear enough, simple and straightforward. And I hope this helps. If you have questions, leave your questions in the comment section down below or join our Discord with the link in the description below to ask your questions. And either myself or moderators or any member of the community will be willing and able to help you with such, right? So what happens if we don't get a reversal and a retest? I'm going to stay away from the trade because you remember price moves in price does not move in a straight line. So price moves in a consolidating pattern in waves. Price moves like this: reversal, up, reversal, up, reversal. There's no way on chart or on any chart you see price just going up without pullbacks. Yes, there can be prolonged period of time where we get massive bullish candles, but at the end of the day, we tend to get consolidations, we tend to get reversals. So if we don't get a retest, so alternatively, we could get a consolidation around these price levels, right? So a consolidation and a bullish move to the upside. So this consolidation is simply known as a bullish continuation pattern, which is also a solid sort of confirmation telling you that price is going to go higher. So if we get this, then I'm going to go long on a breakout, and my stop loss could easily be below the consolidation that leads to the breakout. Okay, these are a trade, simple and straightforward. If it works, it works. If it doesn't work, it doesn't work. But you know exactly what you are watching out for to hit the market instead of just jumping into trade because the chart looks good. So that's it briefly for gold. That's quite some time spent on gold. Moving on, we'll be talking about Nasdaq. So Nasdaq chart looks bullish, has been bullish for almost a year now, I think, or even more. Let's see. So this is the 4 hours chart on Nasdaq. If you go all the way down to these price levels, you can see all the way from October 2022 or December 2022 is when we started our bullish move till present time, right? So we've been bullish on Nasdaq. So I'm going to zoom in a little to see how we can take advantage of this price action, because honestly, I think this has left us behind. There's no way you are jumping into a trade at these price levels except you are really, really, really crazy and don't care about risk, right? So meanwhile, price currently is trading above the 80% level on our relative strength index, which means price is seems like it's been overbought. But just because price is overbought doesn't mean it can't go higher. I'll give you an example. So you can see over here, you can see when price got to these price levels, it was overbought at this price level on the RSI, but you can see it stayed around the overbought level, which gave it more room to run higher, right? So that's what I was trying to say when I said that's what I meant when I said it could be overbought and still go higher. So there's a good chance we still, consolidate a little and then go higher, even though the RSI is being overbought. But here's what I'm going to watch out for to go long. Remember, we're not going short because this is extremely bullish. Going short will just simply be like shooting yourself in the foot, right? So to go long, you guessed it, I'm going to wait for a pullback. That's what I do. Wait for a pullback, get the best trade opportunities, and then bam, strike the market. Okay, so wait for that pullback. So this is the next logical price level to expect a pullback, and then see if we reverse. So you don't just jump into the trade based off of the retest. You wait for the retest. After the retest, you wait for a reversal, then you jump in your trade. So if this happens, I'm going to go long here. Stop loss is going to be below the retest. Take profit target, first take profit target, you guessed it, it's going to be around the highs. If this is the highs we get before we do get a retest, right? Then I'm going to hold a little bit of positions to ride the rest of the trade as we go higher, if we do go higher. So remember, I'm not a magician. I don't see visions. These are simply anticipations based off of previous price actions. So I'm going to show you an example. You can see we had a good run all the way this price level. So we had a good run and we had a reversal retest. A good run, we had a retest. Now we are having another good run, and I think it's most likely going to end up in coming back down to give us that retest for a good trade opportunity, right? I'm going to get rid of these lines. Yeah, so alternatively, we could get price even going a little higher first before coming down for the retest. So the higher the price moves, the stronger the pullback. And some traders want to catch the sell trade opportunities during the pullback. But the problem with that is you really don't know when the price is going to reverse. And just because you have a fixed set target, you may end up, getting liquidated from the market, right? So if we get a higher pullback, I'm going to show you what I meant. If you get a higher pullback like this, for example, it could mean that the pullback could last only to these price levels before we go higher. So you may jump into a sell trade expecting price to come to this area of value, but then that may not happen. You get halfway pullbacks and you see price continue to rally higher. So that's something to watch out for. That's why you pay attention to only important area or values where you are sure of these price actions, right? We could even see price, going higher like this, coming to these price levels, consolidating a little. Instead of going higher, we tend to break lower, coming back to this other area of value before we go higher. So that's the reason why you don't just jump into a trade when we get those retests. You wait for a solid pullback. Then it gives you an extra layer of protection, an extra layer of confirmation before you jump into those trades, right? There's no need to rush. It's good to be patient. You are dealing with real money here. Be patient, take your time. You can't make all the millions in one trade or in one day. Take it one step at a time, build consistency, and over time you see the reward of being consistent with a solid trading strategy, right? So that's it briefly for Nasdaq. I won't be going short, and I won't be talking about US 30 or S&P 500 because they are almost all the same, right? So focus on Nasdaq and focus on gold, and as well as the other 3 charts opportunities I'm going to be talking about in this video. So moving on, we'll be talking about crude oil. So crude oil, daily time frame, if you zoom out, you can see we had a nasty dump over here in 2020 leading into 2021 with a bullish rally. Then we ended 2022 with a bearish move to the downside, and since then we've been oscillating. You can see price consolidating within this price level. But right now what I see is price creating a symmetrical triangle, and I believe you all know what that means. It means price could either break upwards or downwards to either side, right? So we could either get a bullish breakout, or we could see price reversing from this trend line all the way down to this price level, then before we go up, breakout, or possibly come down, break down. So whichever the breakout or whichever happens with the breakout, you should be fully prepared and fully ready to attack the market as the price action evolves, right? So this is just a brief overview on the daily time frame. We're going to go down to the lower time frame to see if we can spot out good trade opportunities for the week ahead. I believe you can already spot out the great trade opportunities based on the levels I've marked out on this chart. So we're going to be focusing on what's happening over here, because these other price action is kind of irrelevant right now, because we have our lines marking out these levels to watch out for us. So going down to the 4 hours time frame. So 4 hours time frame, what can we see? You can see price has just been rejected by an area of resistance, right? This is a resistance level, which also coincides with this massive trend line we had on the daily time frame guarding the highs, right, of this price action, and this one is guiding the lows of the price action. So what could we see? For me to go long, so we're going to talk about the bullish case scenario first before the bearish case scenario. So remember, like I said earlier, it's a symmetrical triangle, so price could break down, give us a bearish breakout or bullish breakout. So it doesn't really matter which side of the trade you lean on, as far as you get your confirmations, you can go in. As compared to gold and Nasdaq, I'm just strictly bullish because strictly a bullish trend, and the price action suggests that the bullish trend is going to continue. But for crude oil, we are consolidating, we are oscillating. There's no clear direction yet, so that's why we could either go short or go long. So to go long, first bullish case scenario will be watching out for more consolidation over here, followed by a bullish breakout. So the bullish breakout has to take out this resistance level. So I'm going to go long at a break of the resistance level. My stop loss is going to be below the consolidation that leads to the breakout. First take profit target, of course, is going to be around these highs. Yeah. And second take profit target is going to be around this higher or larger resistance level we saw on the daily time frame right over here. So this is how I'm going to trade gold. First bullish case scenario, right? And I think the bullish case scenario looks way cleaner than the bearish case scenario, and you're going to see that in a minute. So another bullish case scenario, right? If we tend to get a pullback, I'm just going to get rid of this. So another bullish case scenario, we'll be waiting for price to get a dump into this area of value, consolidate, and reverse to the upside. So this will be another bullish case scenario to go long. Entry is going to be here. Stop loss is going to be below the consolidation, below the retest that leads to the bullish bounce. And first take profit target is going to be around these highs. And if we break through, second take profit target is going to be around these highs. And third take profit target is going to be around these highs, as you clearly can see on the chart. So these are my two bullish case scenario for crude oil. Other than this, I'm not just going to jump into a buy trade right now. Remember, patience is the game. So for a bearish case scenario, we're going to talk about that in a minute. So bearish case scenario, let's see what we have here. I'm simply going to wait for price to come into this price level, consolidate a little, and then give us a bearish breakout. So then my entry is going to be underneath this breakout. Stop loss is going to be above the consolidation at least of the breakout, and first take profit target is going to be around these lows, right? So around this range is going to be my first take profit target. The reason is because we have a good consolidation over here, and this is the immediate lows before we had a bounce for this retest and then a move to the downside, right? So it makes sense to set your take profit target around these price levels. Meanwhile, you do not want to target this trend line, because there's a good chance we never get to this trend line. Okay, so markets can be tricky like that sometimes. So it's good, it's logical to expect price going to this area of value, consolidating, and possibly, you know, reversing to the upside. So if we do come into this trend line, then all you have to do is wait for another consolidation and then a bearish breakout. So this seems like a bearish continuation patterns. So these consolidations are bearish continuation patterns, which will guide you into taking those trades. So this is the only way I'm going to take a sell trade moving forward on crude oil, right? So this is the safest way. So if you want to take more risk, you don't really care about taking risk, okay, which I don't recommend, but for the bears out there, it's fair, it's okay to do this. You could take a trend line like this, taking these lows, right? So when you take a trend line like this, you could go short. This is risky, okay? You could go short when we get a breakout, something like this. You could go short here, right, after a proper breakout from this trend line, and the breakout has to also take out these lows, okay? Has to take out these lows. So if you do that, then you could go short underneath these price levels, excuse me, yeah, you can go short here. Stop loss is going to be obviously above these highs. First take profit target is going to be over here. Second take profit target is going to be around here, as I've said earlier. So this is how I'm going to go short on crude oil if I was going to take on so much risk, if I'm not patient enough to wait for price to get into this level for me to see what's going to happen. So this is another good opportunity to go short, but it's risky than, you know, waiting for price to get into this secondary area of value, consolidating and giving you that breakout. So that's it briefly for crude oil. I know this video is getting longer than expected. I'm going to try to rush the other two charts, which are you know, GBP-USD and EUR-USD. So moving on, GBP-USD charts, daily time frame, we had a massive move to the downside within the last 3 years, from 2021 to 2023. We had a move to the downside, right? To 2022, excuse me. Then 2023 to present time has simply been about consolidation, trying to recover. So we're talking about the roads to recovery for the British pounds against the US dollar. And I think we're going to see some really nasty bullish price movements within the coming months, right? So we have to be properly prepared for that and, you know, set our mind right to take advantage of this price action. So daily time frame, we have kind of like a, you know, an ascending triangle, right? We have price making higher lows and we have a clear resistance level over here. So there's a good chance we get a bullish breakout which will send price higher, and I've marked first area of TP, second area of second take profit area, third, and, you know, so it is as we, you know, go higher, right? So going down to the lower time frame, I'm going to check the 4 hours time frame first. You can clearly see a resistance level over here. So the only way I'm going to go long on this is waiting for a consolidation and then a bullish breakout to go long. So I'm going to go long at the break of that consolidation, break of the resistance level. Stop loss is going to be underneath the consolidation, at least at the breakout. Take profit target, as you know already. First one here, second one over here, like we illustrated on the daily time frame, right? So the reason why I wouldn't be jumping into a buy trade if we do, you know, get a bullish breakout right now. So let's say, for example, we get price immediately just breaking out. It means if you jump into a trade here, it means your stop loss would have to be over here, and that's going to be approximately, let's see, that's going to be approximately 300 pips. That's just too big, right? So you don't want to do that. So that's why we wait for a consolidation and then a breakout before you go in. So if this happens, all you have to do is simply wait for the consolidation above this place, right, above the resistance level, followed by a bullish breakout. So that way you can go long on a bullish breakout after the consolidation, and your stop loss will simply be below the consolidation, at least to the breakout, and take profit targets remains. So for now, I'm not going to be going short on GBP-USD. I don't see any reason to, but for those who are curious, you could take out these lows like this and simply wait to see what price does. Maybe price gives us a fake out, for example, consolidate like this, and then a bearish breakout. So this could be a good opportunity to go short if you are a bearish trader on GBP-USD. Take profit target is going to be around this trend line, followed by possibly an oscillation back up or a breakout down below. But for now, I don't see any reason why I would be going short. But if that changes, if my perspective of the market changes, I'm going to share my thoughts in our Discord community. So do your best to join our Discord community. So that's it briefly for GBP-USD. Nothing much to see here other than what I'll be trading as we move forward this week, if I do get those confirmations. So lastly, we'll be talking about EUR-USD, similar to what we have on GBP-USD daily time frame. We had a massive move to the downside, right? And now we have a symmetrical triangle. So this one looks like it could go either way, so either to the downside or to the upside, but I'm kind of more bullish on EUR-USD moving forward because the dollar tends to get weaker right now. So a weak dollar means EUR-USD is possibly gonna go up, right? Am I right? Yes. So a weak dollar means EUR-USD is likely gonna go up, where a strong dollar means EUR-USD is going to go down, right? So right now the fundamentals, economic events in the US suggest that the US dollar might be getting weaker over the coming months. So I expect EUR-USD to trend a little higher. That's why I'm more bullish on this than, bearish, right? Meanwhile, we just, bounced off of these lows on EUR-USD dating back to 2022. And since then, we've been consolidating and oscillating with no clear direction yet. But right now, I think the market is trying to signal a bullish case scenario for EUR-USD. So going down to the lower time frame, 4 hours time frame, for example, similar to what I'm watching out for on GBP-USD. Remember my rule: wait for consolidations and breakouts. So I trade breakouts, right? So I'm going to wait for price to get into this price level, consolidate a little, and then give us a good bullish breakout. And that bullish breakout would have to take out this area of resistance. So we can see a clear area of resistance over here. If the breakout doesn't take out this area of resistance, I wouldn't be going long. The reason is because you could get a breakout from this trend line thinking, oh yes, here we go, but it could turn out to be a fake out because we could get rejected by this area of resistance. So let me draw this to be more precise and accurate. So we could see price going into this area of value, consolidating, and then giving us that bullish breakout. So then I'm going to go long here at the breakouts. Stop loss is going to be below the consolidation that leads to the breakout. Take profit target is going to be around its highs, and next one is going to be around its highs, as you would notice from our daily time frame. So here we go. So this is how I'm going to trade EUR-USD. Other than this, I am not going to touch this chart. So personally, right now, all I do is trade gold, crude oil, and Nasdaq. I'm really not touching anything related to cryptocurrencies right now. To Forex currencies right now, because they look a little bit shaky. So that's why I'm not talking much about currencies, more focusing on commodities like gold and crude oil, then maybe Nasdaq. So that's it for this week's analysis. I hope this was helpful. If you have questions, leave your thoughts and questions in the comment section below. If you would like to get support with trading, join our Discord community, and there are tons of traders that are willing to help you there. And lastly, if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it from me, guys. See you next week.